And that means we're now live here on our YouTube channel. It's our daily show we call the Halftime Report, where we break down these markets one step at a time, looking at the charts, the news, economic data, any individual corporate news, anything relevant, interesting that we find, in the financial markets that day, analyze it and give you our insight from the coaches here at Tackle Trading. And welcome back to our show. If you're a veteran of the community, you know what I'm going to ask for right now. Hashtag Team Tackle right in the chat. Let's get that thing fired up as we always do. So I have a lot of fun here on a Friday, and it is a Friday fun day as we're ending the week on a light news week here early in June. Got a full panel for you here today. Got Coach Mark, Coach Frank, and Coach Matt here joining myself, Coach Tim. I'm your host here today. Welcome out. And if you're brand new to the show, by the way, click that subscribe button, click the bell, and come back and join us on a daily basis. We do the show every day the markets are live. We go live 12:30 p.m. Eastern Standard Time. Let's bring the coaches on in here. Mark, you first. Pleasantries. How you doing on a Friday, sir?
It's been a great week. I've enjoyed market conditions. I've enjoyed life. And I'm also looking towards the weekend. I mean, that's the perfect balance as a trader, right? Where you're enjoying life, you're enjoying your trading, but then you're enjoying your time off too. I'm in kind of that trading nirvana right now.
And you get to hang out with us on the halftime report here on a Friday. It's
listen,
the quadruple.
I wanted to focus on the positive.
I see. Frankie, how you doing today, sir?
Doing well, as always. Excited to be here on a Friday. Kind of echo Mark's sentiments. I'm never unhappy that it's Friday. My favorite trading day of the week is Friday because I hang out and talk trading with other people and not just my dog all day long. Get to come hang out with the halftime crew, and then I get to do some hanging out over the weekend.
Well, I know it's one of the most popular segments of the week for your Frank's charts at the end of the weekend, getting ready for the scouting report weekend, meetings and all that kind of stuff. Got some good chart setups for us later in the show?
I do. Yeah, there's some interesting things out there. A little bit of everything out there this week.
Yeah, I'm looking forward to it. I know that
and I'm excited for Frank's charts as well, because he was on Trade Masters, beat Tyler this week. When Frank shows up on Trade Masters or on today's segment where he does Frank's charts, it is just textbook technical analysis. Always nice. Whether you're new or experienced, it's always a good time.
He's a hard out. Matty, how you doing on a Friday, sir?
Tim, doing absolutely fantastic. I'm excited to be here with the crew. And, Mark mentioned it's been a perfect week. A perfect week would have seen some follow through to that all-time high we saw in the market yesterday, but given a little bit of a back here today. Nothing to be concerned about. You said relative light news week. This has been a very light news week. Not a lot of information coming out to price into the market. And so could have seen some follow through yesterday, and that would have made it the perfect week as we're coming into the weekend. But doing good, and the market's fairly healthy right now.
Matt, we're going to get into charts right now, but Matt, that is the most lackluster 2.5 week period over the 9 EMA I've ever seen in my life. It's holding, right?
I know.
It's holding.
Listen, but, you, me, and a lot of other people are kind of sick of saying, hey, we kind of like the defensive nature of the market. Where's the offense, right? The longer this goes on, where's the offense? But no,
you sound like a Bronco fan, Matt.
Yeah, I was going to say we got to get you a better hat. But when you're looking at it from an intraday chart, stop me if you've heard this before. Breakout, consolidation above the breakout channel, and that's we saw it again over this week. You had the breakout, you had the tight consolidation all last week. Let me get some boxes so people can see it a little bit more clearly. You got that tight consolidation all last week, correct? You break out late last week, and what do? Again, tight consolidation. But the defensive nature and why you see it as defensive right now is when it does break out, you don't got the where it just runs, and that's what it had the opportunity to yesterday right here, but gave it back on the overnight. But you're still holding those intraday support levels. You come back out to the daily chart, you see that riding that 9 EMA. And anytime you see a market ride the 9 EMA, it does show you it has some confidence. Would you guys agree with that?
Yes.
Right. And so you have confidence going into the weekend. You wish it would have broke out and ran, in my opinion, but from a technical perspective, you're still in that defensive posture.
Yep, there's no doubt about it. What about you, Frank? How do you read these technicals here?
It's almost the exact same as last week, right? Wake me up when something happens. We thought maybe we stuck our nose above, but we're right back to kind of where we started. So I'm as I've said many times, I'm not terribly surprised. I always, expect some sort of summertime action in the market, which is fine because there's individual components. I don't have to trade. Thank goodness I don't have to just, swing trade the S&P directionally right now. That might be pretty tough, but there are good opportunities outside of it. I mean, this week it was the tech week, right? We talked about that last week. You guys brought it up several times. I mean, so it seems like we look at the broad picture and really nothing's happening, right? But then you kind of look within individual sectors and industries, and it looks a little bit better. And I think that's always my expectation for the summertime, as you guys know. So not terribly surprised. Don't think much has changed from last week, really.
As I'm watching the market rattle back and forth on these intraday boxes, Matt, I'm with Frank here. I don't think much has changed from last week in terms of character and personality. But one thing has changed, and that's more time correction. As yes, we're right in the 9 EMA, but those other moving averages give time to catch up. I still love the market up here playing defense. I know that we're all kind of seeing the same thing up here, but I think it's not a bad thing though. What about you, Matt?
No, of course not. I don't think it's a bad thing. Simple consolidation, the defensive nature of the market. We've said this many times. You don't get a pick when the market wants to break out. You don't get a pick when the market wants to run. No. You just got to have the opportunity to follow it when it does. And last Friday, when we saw the market break out, that's officially a breakout. When you saw it break out here, that's officially a breakout. Whether or not it confirmed and continued to run, that is breakout.
It did.
And so you do have a little bit of aggressive responses coming into those resistance levels from an intraday perspective, but there's been no follow through on that daily chart. And when you think about it from just an information perspective, right? Think about this week for a second. Yeah, we broke out on coming in on the over the weekend. Okay. Or excuse me, last Friday we broke out, had a positive price action coming into the weekend. What's that information coming out this week? Earnings reports?
No.
There wasn't any major earnings reports.
Not many.
No.
Yeah.
Economic reports?
Not really. No.
We had the CPI
inflation,
report.
Sure.
Well, that's fine, but the CPI report we didn't really cover outside of just giving the numbers because of why?
It came in line with expectations, and the Fed's not going to do anything. That's right.
There's nothing new that is going to come from the CPI report. We knew what was going to happen. We know what the Fed is going to say about it. And when I say I'm not just talking about tackle trading. I'm talking about every market participant right now. I mean, how many times has the Fed came out and gave speeches saying the exact same thing over the last 5 weeks, Mark?
I mean,
50?
Literally.
Your mic flipped to the wrong one.
Yeah,
I apologize.
Yeah,
I was taking my daily vitamins in between you guys talking, and I flipped it up. No, literally, when you say literally every market participant knows inflation's high, and the Fed says it's transitory.
Yeah, and the debate we're having on that is really a debate regarding how we see inflation, not pertaining to how its impact to the marketplace. And so there's not a lot of information coming out. Even the consumer sentiment report today, not exactly a extremely important one, but had a little bit of a minor impact. You didn't have a lot of that. Geopolitical. We're talking G7 this week. Biden's first international trip, shaking hands and kissing babies, right? And the only thing they're talking about is global tax situation that we don't even know if it's going to have any impact to anything. And so there's just, and let's not forget the fact that we're sitting in the middle of June in a summer where a lot of people are getting back out to the real world. And so there's just not a lot of participation right now, not a lot of information that's coming out to the market to drive the market. And so you can understand, and I'm just trying to give context to the understanding of why we haven't seen a lot of aggressive price movement, and quite frankly, on either the bullish or the bearish side of it, side of the equation.
Yeah, just playing defense up near the high, no real follow through, and lighter volume on a very, very light news week, no question about it. Marky, how do you approach a week like this? I mean, we got to prepare for next week. Obviously, there's still potential trades like Frank talked about.
Next week it changes though.
It's harder. You're going to have different perspectives. As someone who's almost entirely a cash flow trader, it is something like this is like, this is great. This is another great week. Like it's the market doing nothing from a cash flow perspective, you're not unhappy about it, right? Maybe that's why I'm so pleasant. I've had, just do nothing can be a really good situation. And so from a cash flow perspective, I look mostly at stability. Is there stability? Because great cash flow environment isn't when there's support breaking, right? And it can create opportunities, but it can also create a lot of stress. And and as long as you're holding those moving averages, as long as horizontal support levels are forming, I mean, the market can do nothing all summer, but from a directional point of view, I mean, Matt and you and Frank are far, bigger directional traders than I am. How do you guys approach this situation?
Well, there's several things
Same
on
way I
next.
approach every market with hovering below a resistance channel, wait for the breakout.
Sure. Yeah. No, from a technical perspective, I
Right.
think it's just patience, waiting for your
Yeah.
setups and waiting for your triggers. There are some things.
Very quickly.
Oh, go ahead, Matt.
Simply because the market is stagnating in a tight range over the last 2 weeks doesn't mean every stock is in a tight range over
Right.
the next 2 weeks. It means when you take the collection of the 500 stocks in the S&P, collectively they're trading in a tight range. That doesn't mean every stock is dojing over the course of the last 2 weeks. You've had some good price action in certain sectors, in certain industries. It's a stock picker's market. It's just in general, it's a lull in the market.
Mm-hmm, mm-hmm.
Yeah.
And as light as the news has been the last 2 weeks, we do have a Fed meeting next week, which I don't expect any
Well,
policy changes, but that's bigger news than what we had this week, regardless of what they say. And you got PPI. So maybe there's going to be some more action next week in that regard to drive prices, Matt. I don't know.
No, I certainly think you have. And again, when the market is asleep, it's a matter of, do you have the opportunity to break that market out of that sleep and get it moving again? And when you're looking at those situations, yeah, you're looking at economic reports and you're looking at the earnings calendar and you're seeing, okay, what can come out to impact the market so that I can be in front of the market if it does, want to wake up and start running again. And yeah, this week, very light economic calendar. Next week, core retail sales on Tuesday. Fed meeting on Tuesday and the announcement coming on Wednesday, followed by a press conference on Wednesday that Jerome Powell's going to have some questions on the transitory language of inflation, since we've been seeing massive increases in inflation across the board, not just in the U.S. but in other countries as well. We're seeing reports of company after company after company increasing costs due to it. And so there's going to be some questions regarding, is this a supply problem or is this a monetary policy problem? And so there's going to be ongoing conversations regarding that. And then you got some manufacturing index numbers that are going to be fairly important to the industrial type theme that has driven the market over the last few months as well. And so, yes, next week you do have that opportunity to have the market start moving because you have more information coming out next week than you did this week. But again, we've had the opportunities and the market hasn't wanted to break. You just got to be in front of the market when it does.
That's right. That's right. As I'm looking across the rest of the indexes, I see a little bit of relative weakness in the Dow relative to the S&P on the pattern. The NASDAQ is firming up, pushing towards 14,000. The Russell's got a nice little flag after breaking out earlier in this week. Maddie, what are you seeing across the different indexes? Then I want to get Frank's take on it as well from a technical perspective.
Well, like we said, when you're looking at the S&P, the collection of the 500 stocks, yeah, doji doesn't mean that's what we're seeing in the entire marketplace. I think in the Russell 2000, you're looking at it if we did rank the Russell 2000 at tackle trading, the Russell 2000 over the last week would have been right there at the positive 40 spot. Would you guys agree with that?
Previously to this, right?
Previous to this week.
Yeah, I would agree with that.
Okay. Intermediate neutral range at the top end of the range, threatening a breakout, is always a positive 40 for us.
Yep.
Always. I mean, that's not even debatable. And what did you see this week? You saw it break out of the range, right? You achieved the 2300 resistance level. You broke out, good candle, good technicals, all good, consistent price action here. And then what do you get? The market's asleep. This retraces back down into where? A little bit of Cody special here, guys.
Yeah.
right? Little snapback bull flag coming into the old resistance, new support level, thus confirming that new support level. You got to like that. Where does that 2300 level come into? Right where that 9 EMA is now. You rolled the 9 EMA on the top side here in the consolidation high base. You broke out, you snap back, come right into the other 9 EMA. Now, Mark, you talked about the market being asleep, but still holding the 9 EMA. Well, very quickly, and I'm sure we'll talk about crude in a second, but what's crude doing?
It's
Same
holding
thing.
the 9 EMA,
It's
but it's not all holds of the 9 EMA are created equal, right?
No, they're not. But the point is, we're seeing that across the board. Whether you're looking at the S&P, the defensive nature is right on that 9 EMA and right on the old resistance channel. When you're looking at crude, holding that 9 EMA. When you're looking at Russell 2000, what's it doing? Same thing, right? So the snapback coming into 2300, I really like this snapback retracement in the Russell 2000 from a technical perspective. I think the technicals coming into this breakout were very consistent. You had ran a mile coming into that channel, and instead of breaking out, you consolidated. You reset, and this consolidation right here resets this from overextended into a high base. It resets that. You see it come down here? It resets that overextended RSI into now at 65 with positive room to run. All of that is a positive thing from a technical perspective when you're talking about the Russell 2000. And then what does it do? Establishes that new resistance level that pertains very closely to the old resistance level. Snapback coming into support. And now instead of running into that old resistance level from 2360, now we're running from 2300. Everything is consistent here. And so if you were ranking the Russell 2000 and you were looking at it from a positive 40 perspective, which is an anticipatory breakout type ranking, I would say, you get the breakout followed by the snapback. You're looking at upgrades, and you're looking at a situation in the index where it's a positive situation. So you're thinking, man, there's got to be some stocks in that index that are looking really good too, right? Top-down analysis, stock market index, sectors, industry groups. The rising tide raises everything. Index breaking out. There's got to be some things underneath that index that look really good. What our job as traders is to find those diamonds, to find those great technical setups that are looking to price appreciate off of what the Russell's doing in from a support level perspective at 2300.
And that's what the coaches do each week when we go out and bird dog and find our candidates for our weekend reports. I want to get Frank's take here.
Very quickly, and then going to Frank. I haven't done my scanning yet, but I promise you my scanning is going to be a lot in the Russell 2000 today.
Smaller cap. Yeah, top-down analysis. I mean, that's the logic behind that, right? Frankie, any other thoughts on the broad markets here that you're seeing in the indexes, the NASDAQ, the Dow, the Russell, anything?
I think Maddie summed it up pretty nicely. I think maybe the one thing you could add, and this might just be, probably more, short-term thinking, is you are seeing a little turnover from the things that were super hot, right? Like industrials, finance, materials, into the things that weren't quite so hot, small caps, right? They've been hot, last few weeks, of course, tech and things like that. So I think you are seeing a little bit of turnover in, sectors and industry group for, the next swing, if you will, which is always a fun thing. I like the rut where it's at, though. I think this, for me, I look at just a wee bit different than Matt, because I would want to see, and I'm sure he would want to see this too, but I wanted to see it smack into that old high and then take some time to cook, right, Maddie? Whether it was consolidate, because like you said, if it broke that the day after that, on Tuesday, it would have been really hard to want to, get in on that breakout because we had ran so hot into it. So this little cooker here, I don't know if the flag gives you enough room. I will assume that the all-time high stays the all-time high until it's proven otherwise. That's just how I operate. But I really think that there are some interesting opportunities in this space. I pretty much echoes Maddie's sentiments from a broad market perspective.
Yeah, fantastic.
And yeah, Frankie, to answer your question, the ideal scenario would be to slam into the all-time high, consolidate for 4 or 5 days, give us a clean breakout against the all-time high, and beautiful, beautiful breakouts galore. Right? That's the Michelangelo situation.
That is, and we still got it on the table, right? It's still a possibility that we get that.
And I was going to say, a close second to that is a snapback bullish flag pattern that kisses off support and confirms, right?
Oh yeah.
So whether you're looking at it as a, man, I would have loved to see that, or this is what I got. I think when you're looking at it from an index perspective, I think the NASDAQ's going to, we achieved that 14,000 that we talked about. The NASDAQ's going to have some chop up here, in my opinion, right?
Yeah.
That there's a lot of strength happening in the NASDAQ yesterday. And we talked about Zoom yesterday with the potential breakout on Zoom. Look what happened on Zoom here today, guys. Put it on people's radar, and guess what Tackle does? Boom. So when you're looking at the NASDAQ, yeah, I'd like some of the individual plays in the NASDAQ, but I do think the index could see some chop as it navigates this 14,000 significant whole number. You had some chop even north of 14,000 as it tried to punch up and break out of that resistance level. When was that? Back in April. So you could see some chop here as it navigates that. You could see a little bit of defensive chop in the S&P. Again, when I'm looking at it from an index perspective, I still have the S&P 1 in terms of index rankings. You got, Frank, you made a wonderful point in the Dow Jones. You are seeing turnover in the Dow Jones. We downgraded before the market started turning over this week. We actually downgraded the industrial sector last week, and it's most likely going to get another slight downgrade here this week as you start to look at violations of intraday support as this starts to move, not to move, but starts to behave from a technical perspective more in terms of a short-term neutral type market than a short-term consolidation preparing for that bullish breakout type market. And so you're probably looking at a little bit of downgrade. We've seen the theme show a little bit of kinks in that armor over the course of the last few weeks as well. And so what do we know about the anatomy of a bull market, guys? The anatomy of a bull market is things take a break.
Mm-hmm.
Things take a break. Themes, sectors, indexes, they take breaks because other things start moving and it captures our attention and things get overextended in the short term. Well, something's not overextended. Well, what's not overextended right now? The Russell 2000. What's been out of favor for the last few months? The Russell 2000. What's nobody been talking about? The Russell 2000. And what have we been seeing just in the last week? We've seen the underbelly wake up a little bit. We've seen the pot stocks wake up a little bit. We've seen the meme stocks wake up a little bit. And not just from a price perspective, but from but what are people talking about? Mm-hmm. They're not talking about Apple right now and the blue chips right now, and they're talking about what's happening in the underbelly. They're talking about small and mid caps. They're talking about inflation. They're talking about geopolitical situations that impact the S&P. None of this has an impact on the Russell 2000 in comparison to the S&P. So you are seeing it wake up. And can the Russell 2000, can we see that rotation that we saw in November? And then it rotate back to the S&P in March and April. Can it come back to the Russell is an open question. But right now, from a price perspective, you got the S&P as a defensive market. You got the Dow Jones turning over a little bit into short-term neutrality. You got the NASDAQ showing a lot of love, but going up against a very, very important resistance channel that could see some consolidation, could play a heavy resistance here. So I'm looking at an index perspective, and I just come back to the Russell 2000. And when you're looking at technical analysis, it's just a picture. Everything's just a picture here. And the picture I'm seeing on the Russell 2000 just looks a heck of a lot better than the other indexes right now.
Yeah, I agree. And I love the breakdown there, guys. Appreciate it. A lot of insight on the technicals there. Let's keep moving through the markets if we can. Let's take a peek at the commodity markets next. Bring Mark right back in here. Crude light. Matt, you mentioned the chart earlier, firing off and rallying off that 90 EMA and continuing its strength here recently. Mark, I saw a couple little chatter items. OPEC reaffirmed their demand outlook for 2021. They've been saying positive stuff there for a long time. Nothing really to note, but just a really, really strong price right now. What are you seeing in the chart? What do you think?
Well, listen, I'm going to go back 22 days on that third big red candle. And then you had that, I mean, the news headlines were crude's over, crude's plunging, all the scare headlines the mainstream media loves to throw out. and then you had a violation of short-term support, and you had a bounce back on Friday. I mean, I was on the commodity report. I was I said, like, this is telling. This is telling, and it was telling to me because like crude had a chance to go down, had technical, had short-term sentiment, had the scared media out there trying to send it down, and it bounced back. You saw follow through on Monday, and then you've seen 3 weeks of healthy price action. So the price action is not surprising at all to me. I mean, we've been very bullish on oil for months and months, particularly bullish in recent weeks, and getting another little breakout today. Feels like it wants 75. That I don't have anything other than, hey, that's where the last technical range was. When you go back, 75, 76 feels like it wants that. But you got short-term momentum, and when short-term momentum gets going, I have learned, I can guess 75, but I've learned not to stand in this way and try to. Short-term momentum humbles me when I try to guess when it will stop. So eventually it will stop and take a little breather. That's what commodities in particularly do. But it's been a very healthy environment for energy. Mm-hmm. Very, very healthy environment for energy.
Matt, Frank, anything you want to add to crude oil?
Yeah,
chart?
I mean, I think this is a tradable break, to be honest with you. I talked about it, we talked about it last week. 70, is it going to play a role? There doesn't have a ton of history there, but it's a round number, and being crude, it's been everywhere, right? I would call this a breakout out of that. And from a technical point of view, and Mark's right, you get momentum, you're never guessing where it ends. But I can't come up with any good technical reason why we aren't pushing into 75. I mean, not saying it will. I hope it does. Probably it benefits more of us than it doesn't. But technically, I mean, there's nothing there, right? There's a big open window into that 75. We've got momentum. We've come out of a little intraday breakout. Obviously, the longer term is very strong. I don't think there's any reason to believe any sentiment has shifted or anything like that. So, this would be a spot. This is the type of environment that I think crude is best to try to directionally trade. I think you really want it to be very momentum based if you're going to try to directionally trade, at least from a swing perspective, right? Intraday is a little bit different. This is exactly what I want to see. If I'm trying to trade crude, now I'm still, I'm still going to be looking over into the energy stocks. I got one in particular I'm looking forward to talking about with you guys here in a little bit, but I think you really like this as a signal. At least I like this as a signal. And I think 75 is a pretty, anything can come and get us, but right now, I don't see any logical reason why we aren't pushing that.
Matt, what do you think?
Yeah, I'm not going to disagree here. It's not exactly the cleanest high base breakout you've ever seen. In fact, it's a little bit of a choppy high base breakout, but you do have the key metrics of consolidation with increasing support levels intraday that do give you a breakout here. And I would agree with Frank that this would be a confirmed breakout. And again, it's not the cleanest here, but you do got 4 or 5 days of consolidation here on the intraday chart as that 9 EMA is caught up to it. You see it kiss off that a couple times. But I think what's really kind of telling is that when you come down into the 30-minute chart or one of Frank's favorite intraday charts, and I do think it really paints the picture fairly clear on that 1 hour chart, quite frankly. Look at this increasing support level. You got this random wick here, but what do we know about that? That's inflationary data that had a fairly big impact on the intraday analysis. But you do have this nice increasing trend line intraday. You have a horizontal resistance level right here at 50.5. And so what happens today? You see that find support on the overnight action, come into that resistance channel as all of us are sleeping. And then as the market starts waking up here on the East Coast, what do you see? Boom, boom, boom. You break out, whether that's the bank open, cash open, or however you want to consider that open, you break out and then you show strength coming down into a shorter time frame from an intraday perspective. You did have a little bit of a bullish retracement as that market was picking up steam, and the first test of support on the intraday perspective, well, came into old resistance, new supports. It confirmed, it passed the test. And so intraday, daily to intraday, it's passing the technical test. You got to consider this a breakout. And where can crude go from a price perspective? I think everybody, Frank's dog, my dog, Rosie, where's crude going to go, Rosie? Rosie says 75.
Yep.
I
it just stands out, right? I mean, and that's all we really have to go on.
Dude, I wouldn't doubt that Rosie could read charts. She's a pretty smart little dog, and
Rosie sits on my lap and stares at charts lots.
She hangs out in your office quite a bit.
She paused at the chart when's a good one.
Yeah. All right, let's flash through the rest of the commodity market real quick. By the way, Bitcoin, nothing going on there today. We don't need to really break too much of that down unless you guys really see something in the chart you want to add to. But gold, I do see some interesting stuff that needs to be addressed. Matt, anything
we
on
should
Bitcoin?
Absolutely do a 30-minute deep dive on the technical analysis of Bitcoin right now.
Go ahead. I can go get a coffee. I mean,
I could do it. I don't think it'd be very good for everybody.
Not very helpful right now. And there's not much in that choppy mess, volatile range. And that's been the news and the price action for a while. Though gold, Matt, hesitating up at the high. Do you want to take a peek at that one real quick? It's catching up to your line. It really is. And holding that trend line.
It's got the line, bro.
Yeah.
It's got the line. When did I draw that line?
About a month ago, probably after the breakout.
It's like right here.
That's about a month ago.
Yeah.
Well, 3 or 4 weeks ago. Yeah.
Yeah. Caught up to the line here. You saw it kiss. Now we'll see what happens. You don't have a new trade. The line represents the trend is what it represents. And until that is violated, there's nothing really to be concerned about. Gold is not in the last, month, gold is not a new entry. Like there's been no new entry in gold. Like the entry in gold was here. There is nothing new here. This is all trade management of that potential reversal. And so now we're looking at this. Okay, now we're at support. Now we're at the trend line. Now the analysis begins. And so at this point, you are now looking at, let's hold support. Let's line up a breakout and see what we can do. But it's still going to take some time before that occurs.
Yeah. And gold's hesitation up here at the high, Frank, is maybe potentially setting up a little high base scenario if we can catch that over the next little bit.
But I mean, if we could keep, another week and a half or so, kind of keep holding that trend line, but not breaking out. I think if you're looking at a new entry, unless you want a deeper pullback, like probably Mark does. If you're looking at a new technical entry, I think a little bit of cooking where resistance holds, but the trend line holds, leading us into a break a week and a half, 2 weeks from now. Yeah. I think it's too early to say. I mean, if it just happens on Monday, it's just a breakout. I wouldn't call it anything other than that. Not to say that I expect it to, but I think you need a little bit of time if that's the pattern that you're looking for.
Yeah.
Well, and also when you're looking at that deeper pullback, and certainly that this trend line can be violated, guys.
Sure, of course, yeah,
certainly can. Okay, but when you're looking at the potential here, I really only see two potentials, right? You do have the deeper pullback, okay, and the deeper pullback, you're talking 1850 here.
Yeah, 1850.
You're not talking 1800. If it does 1800, you're looking at a different technical scenario. You're talking 1800, that 1850. You got the 200-day moving average, the old breakout channels 1850. You also coincide that with the 50 weekly moving average as well, right there in the 1850 level. And we know the importance of the 50 weekly here on gold. Kiss. And if I go back into more time, kiss. And so we know the importance of the 50-day moving average for the gold chart. That coincides really nicely with the old breakout channel. It coincides really nicely with the 200 daily, 200 SMA on the daily as well. So deeper pullback analysis will always start on the weekly chart, and you're always looking at finding where those levels of support are that could be very, very, very strong in potential reversal scenarios. 1850 really stands out. 1800 stands out if we look at a little bit of a deeper scenario. If 1850 does not confirm as a support level. The next one is, for me, really starts on the weekly chart as well. Everything for gold for me right now starts on the weekly chart. But when you're looking at the next one, you're looking at the potential breakout. And 1900 is a significant whole number, but you're really talking at this point the top end of the range at 1920. The reason you got to give it above 1900 and look at that top end is you don't just have one wick here. You got a lot of chop north of 1900, a tremendous amount of chop on both intraday and daily chops above 1900. That gets cleared up pretty nicely above 1920. And so you're looking at either 1907 intraday, 1920 on a daily perspective. And so you will have breakout opportunities in gold as well, but you're looking at, for me, I think you do have to clear all the chop, but I do see a potential 1907 trigger that could see momentum coming into 1920. So 1920 is the top end of the range on a potential breakout on the weekly chart. 1850 is, in my opinion, where you would be looking at deeper type pullbacks that would not violate this short-term trend. If 1850 is violated, then you're talking about a different technical environment because you violate a lot of what is driving the price action right now. So you do have some opportunity, but I just think in gold specifically, that opportunity is forming up on the weekly chart, which does take, I mean, I'm not breaking any news here, guys. Weekly charts take time.
Mm-hmm. Yeah. Yeah, weekly charts do take time to develop, and we're going to be patient on that. But I do think the technical analysis on multiple timeframes is needed there on gold. To give it a little context, we'll keep watching it. The dollar, Matt, by the way, gold down today, obviously, I think is really going to be due to what's happening with the U.S. dollar firing off support. Happened in the middle of the night in Europe. Just looks like a strong technical response off of that support level. Going to have to probably respect it. What are you seeing in the dollar chart here, Matt?
Well, I'm seeing, you got to respect the price response coming off support, but this support level on the dollar is extremely strong over multiple different time frames, and so support held this week, no doubt, pushing the dollar back up into resistance. You're looking at potential short-term consolidation here, short-term neutrality here. You would be looking at upgrades on the dollar in the Forex report coming from tackle trading this week, though.
Yep. Let's move right into,
and this goes without saying, but that certainly would have an impact on gold analysis as well.
For sure.
Yep. Let's move right into stock talk. There's not a lot of corporate news items that grab my attention, guys. A couple of earnings reports that I don't really need to break down to care too much about. What about you guys? Do you care about Chewy earnings, Dave & Buster earnings? Basically came in line, didn't show anything, so not much there. I did see Callaway Golf is getting added to the S&P 400, which I thought was pretty cool for Callaway Golf, ELY. Strong product demand, and it's been just a juggernaut of a company. It had a little bit of a gap down on just the rebalancing type of thing, Matt, but this has been a real strong stock. I like it. What do you think of this chart here, Matt? Is there any opportunity as we look at this weekly thing?
Yeah, there's always opportunity in an uptrend, but when it gaps down and violates support level, I'm going to need some time on this one.
Yeah.
It's just the analysis is a breakout right here. I don't care what the news is. You break that analysis, you got to give it more time to establish itself.
Going to need to have some patience. So outside of that, unless you guys got corporate items, we're going right into Frank's
charts.
It's a
Friday and the slowest news week in the market in the last year and a half. I don't have any corporate news.
Don't have anything. I always think of our old friend Ryan out in Wyoming, who runs the golf course up there.
Oh yeah.
Well, every time I see Eli, that's what I think about. A good follow on Twitter, especially if you are interested in kind of what it's like as a golf. I don't know if he's a superintendent or what the exact terminology is, but he's a good follow on Twitter to see what life running a golf course looks like. So if you're out there, Ryan,
that's great. I love his pictures on Twitter.
Yeah, I do too. Yeah. I also love that he's still, because he came from, was it Florida? It was somewhere down south a few years ago, and came to Wyoming to work. It still cracks me up when he sees like snow in June. He's like, this isn't supposed, he's getting used to it, I think, but it's taken him a couple years.
By the way, Coach Frank runs the Tackle Trading Twitter, and Ryan's one of the Team Tackle members that follows him. I'm a follower of him as well. I love those golf course pictures, and it's really cool. At Tackle Trading on Twitter, go and join the community over there. But Frankie, and that's where you also put up a lot of great charts, but you're going to share some of those with us here today. What you got for us today, sir?
Well, I've got all sorts of things that I'm going to have to comb through one at a time, but definitely one I wanted to talk about, and maybe we'll start with these guys so I don't forget to do so, is AM. Oil and Gas Pipeline Company. A couple things about these guys. So they broke out early this week, right? Mm-hmm. I think if we were talking about these guys last Friday, we said, hey, if these guys get above 1020-ish, that's a breakout. If we like risk to reward, there's something to do there. Well, we did get that, and we really just kind of consolidated, haven't really gone anywhere. We're starting to cook here today with crude breaking out, though. That's definitely helping us out a little bit. And I think it's giving us a second opportunity to get in on this breakout if we see fit to do so. On AM here, there's a pretty good space that we have to work with. Now we're going to have to deal with the 200 weekly, but that is way ahead of us, around 1150, 1160. So we've got a lot of wiggle room. That was my initial target on that initial breakout. I think that will continue to be the target that I'm looking at on these guys. So this would just be, I guess, a breakout of a breakout, little bit of clear air into that 1150-ish ballpark, a pretty legitimate challenge. Of course, at that point, but that's, at $10.60, that's a reasonable move percentage-wise on the stock. Mark, can I sign you up for a little breakout on AM here?
You can't, but not because I don't love the chart or the opportunity. I mean, I think oil exposure right now comes down to your own personal exposure. I'm maxed out by rules as far as percentage allocation of energy in my portfolio.
So Tim's got to lend you a couple bucks for you to get another oil.
So I can't, if you can lend me some money so I can increase, but I can't by rule add anymore. Otherwise, this is a fine situation as any. So I think a lot of and that's something to never forget is like, listen, you don't want exposure to any one area, whether it's oil or Bitcoin or small caps or, at least I don't. And so I'm maxed out on oil, but it's a fine chart. If I wasn't, I'd be interested.
Would you agree that you're also a very different trader than others? Like you approach it from a cash flow perspective primarily, which portfolio percentage allocation is extremely important there?
Yes, of course.
Okay. As a swing trader, we'll trade anything.
Yeah.
Right? That's like we'll trade anything. Right? One of our old buddies, though, Jeff Crystal, what would he say?
I would trade my mom for a
I'll trade my mom if I had to.
Yeah.
Right? And I would always say, Jeff, your mother's a wonderful human being. I wouldn't trade her. But that's the trader's mentality, right? So I appreciate what Mark says because he's more of a cash flow perspective. Sure. Allocation is extremely important there. Traders, I got an edge. You're going to take the edge, right?
Right.
I love this chart. I love this chart. And there's a couple of reasons. I know everybody's going to look at the breakout here. It's pretty clean and it's pretty easily identifiable as a breakout, correct?
Yeah.
Oh, yeah.
Okay. I think the analysis on this one actually starts yesterday morning. And when you're looking at yesterday morning, you had a little bit of a high base coming into that breakout, consolidating, nice little potential opportunity there. But then on the AM chart, when you're looking at this on that 15-minute chart, yesterday, gap up, but then just got absolutely smoked. Just got absolutely smoked back down. Now, coming out to a little bit of a longer time frame on that hourly chart, though, you're going to see something that is really, really important from a technical perspective. On that 15-minute chart, again, coming to this 15-minute chart, you see that? Oh, man, just getting smacked, right? Just getting smacked, violating everything here. Where's it going to go? Maybe 10, who knows, right? Again, coming out to a little bit of a longer time frame, you see this level right here at 1020. See the kiss over here, firmly established here. Once again, kiss right here. Finally breaks, establishes that higher level of resistance of an intraday. And so when it gets demolished, and again, demolished is just pertaining to this situation, right? Well, where does it get gobbled up? Once again, old resistance is a new support level. And so when you're looking at this on that daily chart, there's context here. There's context here. And so the strength of this candle for me doesn't start with today's price action at 9:30 in the East. It starts with when it came into 1020 support level, and then you just fired off. And over the course of the last 24 hours, you haven't had a lot of selling here on the AM. You're breaking out with the no sell breakout day. That's confirmation. Where can it go? Frank talked about that weekly chart. Seeing that 200 weekly right there? Well, Frankie, that also coincides with a heck of a lot of chop over here too, right? Yeah. So I do think you're talking 1150. So triggering 90 cents target from current price to where the target is, do you have the return to justify the risk is the only question. Yeah, you got the price action, right? And so the question for me is, where's that stop loss? Well, again, I kind of like 1020. So you'd most likely put it underneath 10. But if you can take it, you can go 10, 20. I do like 10 too, but
yeah, you could go 10.
risk,
Yeah, that's
you can go 10.
That puts you right on that neck. I think as long as, and this is just me, as long as you had some sort of intraday as well as the 9-day EMA, propping you up, I would be comfortable probably being a little higher than 10. I mean, lower is better, right? All things being equal, 10 is better than 10, 20.
I think 10, 20 is fine. Like 10, 20 is what stands out to me, right? 10 is that significant whole number. 10 is that 20-day moving average. 10 is that, well, maybe I want to give it a little bit of room to breathe, little bit of a swing position type feel to the trade. But I personally like 10, 20. I like this as a pure swing trade, targeting 1150 with the stop loss underneath the intraday support level at 1020.
Looking good.
That's kind of where my head is as well. Tim, anything you would like to add on that?
No,
we also get the 50 hourly if we go that route, Mandy, which is nice.
No, I think what Matt said is, dead on. And even what Mark's perspective is, it's just fine as well. I mean, if he can't add exposure, that's his own personal approach to it. Matt's looking at it from a technical perspective, and swing traders can make that trade if they can map out reward to risk. So it looks good. There's a lot of good opportunities in those energy stocks this size.
There are.
For sure.
There are, but there's not a lot of high base momentum triggers with a clean stop loss, and that's
right. Yeah,
that's the separation of analysis. Yeah, you have a tremendous amount. Throw a dart at the Wall Street Journal. You have a tremendous amount of potential breakouts. Not all breakouts are created equally.
Yeah, some are just cleaner and easier to kind of build and map out. Whether they work out or not, only time will tell. But yeah, there's a few. You still have KMI. I would argue still giving us plenty of opportunities. It's one of my favorite breakouts in this space. Today would be a conservative confirmation day, right? They broke out, I would say, yesterday, but they confirmed it.
This was your pick Wednesday night.
It was
and part of the reason that I don't have any energy money today because of
he can't make the AM trade because he took the KMI trade. Now we know it. Now we understand what happened.
Okay. Yeah, it's a good looking candle, and so
information would have helped the analysis.
I loved your analysis Wednesday night on Trade Masters on KMI. I was like,
KMI's beautiful
trade. I was like, I'm doing that trade. Yeah, I got my signal yesterday and nice little confirmation today.
I'd call it confirmation yesterday with secondary continuation analysis today.
See, and I'd go the other way. I'd say it showed its hand a little bit yesterday breaking out, but not quite enough to confirm, but holding it today would be that confirmation. So it's all in the eye of the beholder of how you play your breaks, right? But I think at this point in time, everybody, assuming we can maintain this candle on KMI, I think everybody will call this a confirmation candle. I think no matter where we differ, we'll all agree there if we can hold this going into. And I like that there's room within this space as well. So like Tim said, if neither of those are your cup of tea, there are other options out there, but definitely a couple of my favorites.
Yeah, nobody's going to debate today's candle. That's definitely confirmation. Yesterday, here's why I would have called it confirmation. Technically, you did close above the intraday resistance channel. And if it would have came right back down, I promise you, all of us would have called that a fake out. And if all of us would have called it a fake out, you can't have a fake out unless you break out.
It's true. You can't have fake out unless you break out. That's just way too many outs. All right. Well, there's enough energy.
Say that 10 times fast.
Exactly. I got one more breakout, and then maybe we'll take a look at a couple other patterns. But CAR, Avis Budget Group. Avis Budget Group. See if I could say that 3 times fast or once. CAR.
Can I do a little teaching segment? Is that
sure?
Just a quick one.
Can I make a little sidebar rant? People might be renting more cars because of the cost of used cars going up like they have in the consumer sentiment report, the inflation report today. So there might
2
be
months in a row, by the way.
Sentiment
2 months in a row, by the way.
Borrowing cars. But anyway, go ahead, Matt.
Very quickly, the difference, and again, this is just more for curiosity, but the difference between an ascending triangle and a cup and handle is very subtle. Cup, handle, breakout. Cup, handle, not ready yet. Increasing support, breakout. The only difference between a cup and a handle and an ascending triangle is the second point of the breakout holds, increases support. It puts, and it's subtle, but it's important because when it doesn't break out here, but increases support here, it basically puts a tremendous amount of pressure on that resistance channel to get violated.
Mm-hmm.
Ascending triangles, cup and handles and ascending triangles are both very standard continuation patterns. What that continuation pattern does, it doesn't continue the chop in the pattern. It continues the previous trend is what it does.
Correct.
And so when you're looking at this as an ascending triangle breakout, that resets the trend. And again, going back to Elliott wave and way back in the day, don't want to get into Fibonacci talk today, but I was an Elliott wave technician back in the day. And according to Elliott wave, that would be the resetting of the trend, which means you would be going into wave one of the next trend, which is typically fairly good environment from a position to a swing trading perspective. And so when you're looking at this from a multiple time frame analysis perspective, you have a breakout on the daily chart confirming with the breakout on the weekly chart against the backdrop of a very bullish trend and a very consistent bullish continuation pattern called an ascending triangle. This does not get vetoed today.
Beautiful. Multiple time frame analysis confirming as well. I like it a lot.
Although I can't wait to see the coach tries.
I can't wait. I hope it's Tyler.
Tyler,
no, he's not going to, but I still hope he does, because then I can.
But you know how the technical technician will look at this. They'll be like, "Yeah, I love it, but did it run too far today?"
Yeah.
Right. Yeah. That's going to be the question.
Did we miss it? Yeah.
And all of us are going to be like, so you don't like no sell day breakout candles, huh?
Exactly. I mean, I think the only argument, I guess, is, I think 100, just from a psychological perspective, could scare some traders off. It wouldn't me. I think that's a logical place for a first target, but I think, with these guys, I would expect, 106, 107 from a technical point of view would kind of be the target range I would expect.
Mm-hmm. That weekly reversal over the long term is really interesting as well here. Yeah.
Yeah. They've really stepped their game up, right?
Very quickly. And that $100 price point, it does have a tremendous amount of analysis back there.
Mm-hmm.
And so even though we're talking literally 1999, 2000, 2001, it's still going to play a role. It's still going to play a role. It's also one of those very, very significant whole numbers, right? That just have a psychological component to it to a certain extent. So I agree with T1 being the $100 price point. I think it has to be the $100 price point, but you can still map that out because being T1, you just need a minimum standard of a 1-to-1 from a reward to risk ratio.
Right.
Remember, T2 is that 2-to-1 minimum standard.
Exactly.
And so, and again, for those of you that are new to tackle, you might be 1-to-1. Again, according to the step system and how we were technically trained in swing trading, we always target 1, target 2. Target 1 is always the very conservative target. That's not the real target in the back of your mind. That's T2. But you can't target 2 unless you navigate $100 here.
Correct.
That's just, you can't say to me, oh, it's going to go to 105 when all of us know 100 is going to play a role.
It very possibly does. I think you have to assume that it's most likely to, and hope it doesn't, yes. Right? I mean, hope this is, we were just worried about 100 and we didn't need to be, right? Hope for that, but plan for it to act as a little bit of a challenge.
Hope in the dollar doesn't really do a lot in the marketplace. $100 has acted as support and resistance in the past. It is a psychological whole number. It was a support level specifically on this stock for 3 consecutive years. Mm-hmm. It's going to play a role, right?
It's not wise to ignore it.
Yeah, exactly.
It's not wise to ignore it.
But again, that's the future, right? Let's deal with that when it gets to 100. You got to love the cleanliness of this $90 breakout, guys.
For sure.
And Tim, what do we always say about $90 breakouts?
It goes to 190% of the time. Or do we say 100%?
Well, that's not what you say. We say 114% of the time. And yes, we're kind of kidding there, but
yeah,
$100 is a magnet. Yeah. Is a magnet. And if everything stays standard, we should see it. But you got to love the cleanliness of the $90 breakout here on the weekly chart.
Good find, Frank. Really, really good find. What you got next there, sir?
All right, let's shift up our patterns a little bit. Let's look at STEM, STEM.
STEM.
Little snapback.
Little snapbacks. We had a breakdown going back into May, right? A little bit of a descending triangle. Broke down, had a little bit of a run, failed bear retracement, such as it was, late mid-May. Really been cooking ever since. Broke some resistance here last week. Snapback Cody special style here today. Just a continuation of the existing reversal, right? These guys have started that reversal pattern. They've still got some work to do, but I do think, and whether it's you're trying to play the pullback, Cody special style, or if you're looking to, hey, let's let that resistance break, because then we really don't have a lot to worry about, from a history perspective, until we get into some of those highs. I think it's definitely an interesting little candidate that stood out to me. There were some things that looked like this. This was not the only one, but I kind of liked the way that they had developed over the last month and a half after that breakdown.
It's a different picture, different trend, but honestly, if the Russell 2000 confirms, this is going to be a good trade.
Yeah, I think that's fair.
Yeah,
I think that's a fair way.
What you have in the last few days is this is a Russell 2000 component. Okay, it's not index, but it's the same type of
size,
right? Yeah, same type of cap. When you're looking at it from just the last couple of days, you see the snapback coming into $30, right? You see the consolidate with confirmation coming to the Russell 2000. You see the snapback, consolidate with confirmation. So you got a fairly similar analysis there, and you do have the Russell waking up a little bit. STEM a little bit overextended. For me, it's the Russell's going to be a dime a dozen with these potentials.
Sure.
And so it's not like the other two where it's like, yeah, those are easy analysis for me, right? Both clean breakouts, both clean patterns, both clean, easy targets. I mean, those are really good, very standard swing trades. Here on STEM, like for me anyways, I said earlier today, I haven't done my scanning yet, and I'm going to scan legitimately in the Russell 2000 specifically to find. I want to see how this compares against some of those other stocks out there.
So let me see how you think it compares to not the same thing, but same type of, where we're not up at the top, we're not cooking like some of the other areas have, and see if you like this one better, and that's VRNS. So these guys are a little earlier in the reversal phase, but also a little less extended in that phase, right?
Yeah, you're definitely earlier in the potential reversal than you were on the other one. But again, I don't know.
Let me paint you a picture. Let me paint you a picture here, right? So we've cleared all of these moving averages, right? We had a little bit of a consolidation throughout the week. We're breaking today, right? I think you would call that a breakout, whether you wanted to trade it or not. Is that fair to say?
Yeah, it's fun. Technically
call it a breakout,
100%.
Right?
Yes.
You call it a breakout, and you can't trade them all. I certainly understand that side of the equation. We've now made higher highs and higher lows, so we kind of got the characteristics of an upward trend developed. We also have come out of the downward trend line, right? That that you could draw. You don't need to do that, but that has happened as well. Got a little bit of clear space until we get into approximately 58. I would say that's our next legitimate challenge on these guys. Would you agree with 58 as the next real resistance level, or approximately 58, 57 by 58?
You do have some weekly moving averages at 55, but technically, yes, 57 and a half, 58.
So somewhere so maybe 55 for a first target. This would just be a little
even
bit
at
of
55 for a first target, you'd find though.
So yeah,
from a reward to risk ratio perspective,
right? And I think that's probably a way I would look at this as a kind of a cheap risk trade, right? In the sense of I've got the breakout, I've got a lot of things that I look for at least in a reversal: higher highs, higher lows, double bottoms, moving averages flopping around, reclaiming those daily moving averages. A lot of defense on areas where we kind of got into resistance. So that's kind of what I would look at. So on either of these reversals, it sounds like you would be a no to both of them. What about you, Tim?
I'm closer on VRNS than I am on STEM.
Fair enough.
And I'm on the other side of that personally. I have interest in the stem chart, but I think it's early, and I'm concerned about it being overbought. But I do have interest in the reversal characteristics on stem. Obviously, putting in tons of momentum over the last month. I think Matt, you still see that, but the VRNS one just feels early to me. I do see that the short-term consolidation breakout of those last 4 candles, clearing moving averages, developing pattern in my personal, eyeball here. But I have concerns on the weekly chart, just the nature of how that volatility shot all the way up on a parabolic move, brought it all the way back down. So maybe there's something here developing for me, Frankie, but I would be a wait on BRNS personally.
Just let me add one point to that. I just got it, and maybe it's the multiple time frame analysis in me, but I'm having mixed reads.
And if you're getting mixed reads, you don't want to. And I think from a philosophical perspective, when it comes to reversals, I tend to lean to you trade them aggressively, because the ones that work out pay really well, and the ones that don't, you lose anyway, right? And so I think it's probably more of a philosophical difference in how we approach reversal patterns, which I think is fine. I don't think there's a right way for everybody, but that I would rather be a little early once I get clean signals on reversals, because my head, those are where I'm going for the home run, right? I'm just kind of base hitting on AM and things like that. And I think that's where we do most of our good work, right? I think that's the foundation that our trading, in particular, our directional trading is built on. But I do know that if you can get a couple of big home runs, and if I knew either of these guys were going to be that, I'd tell you. But I do think from a purely directional point of view, having those 1 or 2 trades that really just cook for you, it goes such a long way towards making the quarter happy, right? And so I think that's probably where we may differ a little bit on some of these reversal type of candidates.
Well, I'm not sure if we differ on that, because I do agree with that, but on a reversal, I'm pretty standard textbook on reversals, and I just got this as mixed data right now.
Sure.
That's all.
Nothing wrong with that.
Well, the weekly chart has this trend line right here. You're going to have to fight through that. And old resistance, I just feel you have some chop there.
You got too much work to do. Yeah, okay.
That doesn't mean it's not going to work.
No, that doesn't mean it is, right? And that's and like I said, you can't trade them all. And if you get 2 traders in a room, they're never going to agree on everything, right? Even though 2 Matt
technicians
and I are very similar, we still have a
we
few
agree
battles.
90% of the time.
Yeah, but the 10% we usually are pretty back and forth, right? We take a few shots at each other. The other 10%.
We take shots at each other that we were going to take 10 years ago.
Both missed the joke. We agree 90% of the time, and the other 10%, I'm right.
There you go.
That's true.
There you go.
Both missed the joke.
Listen, I know that Mark's always right, so I got to take a look at Ashford today.
Well, and I don't like disagreeing with Frank technically, because again, we see so many things similar.
Yeah, you get wondering, right? Like, what did I miss? What am I missing?
Frankly, though, that's the value in the conversation. When you guys do disagree, we're learning from the way that you
and as we're kind of going through the scattering reports, we find a similar looking chart that maybe doesn't have the same concerns. It's a great way to, well, I still like that one. And don't get me wrong. If it works out, I'm going to remind you next week, but it really helps you kind of, have that conversation. So absolutely. It helps a tremendous amount. Even if you never come up with a consensus, it helps a lot to get another trader's perspective, because, well, you're always stuck in your own head, right?
Yeah, sure.
It's always nice to get another.
Well, Frankie, I love it. When you and I, when we're reading charts in the scouting report meeting, we'll fly, right? Fly. But then when we find one that we're seeing slightly different, we'll argue with each other for like 30 minutes over the one minor time frame difference.
Yep, you'll look at the clock. We're cooking. We're going to get done early today, and then one chart will.
Let me show you the monthly chart from 1955, Frank. Have you taken?
Yeah. And then I'll be like, I didn't look at that. No.
All right.
All right. Maybe a couple more real quick before we run out of time here. This is one of Mark's, and I like it. It's Ashford AHT. I know Mark.
I only brought up HT about 4,000 times this year.
Listen, and I know you've been cash flowing
on,
right?
Penny stock.
So listen, I think that this is the, obviously it's had a good run, right? But this is the first time that I've really kind of been interested in it, like from the pure just straight technicals, right? Because prior to this recent breakout, I mean, we were basically sideways. This was one of Mark's, playthings, and I know it's treated him right. But I kind of like that we've broken out of that resistance. We've drifted back into that old resistance zone. We're seeing a little bit of a doji here today. Talking about cheap risk, high reward type of characters, I think these guys would fit smack dab into that, right? As far as personality wise goes. But I thought that this pullback, into this breakout, I'll be honest, I've completely ignored these guys. Every time Mark's brought them up, I've just went to my own happy place. But when he brought them up this week, I think, you know what? I'm stealing them. I like where we're at technically. I like the doji that we put in here today. One more little doji on Monday, followed by some upward movement on Tuesday to kind of confirm that old resistance of support, I think would be ideal from a technical point of view. Now, I know I'm probably not getting this on the scouting reports because it's more of a individual type of person thing, right? But technically, Tim, what do you think? Can you sign me up? I know, Mark, you're a wimp. You're just going to sell, $5 naked puts. But Tim and I, we're brave. What do you think, Tim?
Well, cue the record, broken record here. Mark's going to say I loved it at 3. I kind of like it at 6. But,
yeah, I'm not. That's why I didn't even ask him. I know.
I mean, that's the thing is once something starts taking off like this, I'm like, well, the no brainer, what at least in my head, opportunity. I'm like, yeah. Tim, you read my mind.
I knew exactly.
I loved it at 250. I like it at 5.
Yeah. If we look at the daily chart, though, obviously you got to be impressed with the momentum taken off here recently, and it's a representation of some of these kind of companies, the underbelly, if you will, starting to wake up over the last couple of weeks, and we're seeing that in the Russell 2000 developing as well, which is why Coach Matt's going to be doing a lot of scanning in small cap analysis here today. I bet a lot of picks are going to come from that part of the market. You got to love the technical analysis here. In terms of higher high, higher low, increasing momentum, you got a doji at the old resistance point, riding the 9 EMA. Aggressive price, aggressive chart, small company that could do a lot of things in terms of price action. But yes, Frank, I am interested here. A little bit of a tougher kind of trigger entry, maybe. I don't know. I'd have to map that out in terms of reward to risk, but I'm interested in pattern and trend. Yes.
I think if we can get one more candle, it becomes fairly easy. But I do think if it goes with, it probably goes without me. I don't think you're going in above today's high, blindly. But if we get another inside candle, I think that hourly chart will develop very nicely where we create that higher low and break out. So that's what I'll be looking for. But I wanted to give Mark a shout out because I don't steal a lot of his, little Ashfords of the world. But I did like this one, and I thought it was interesting. All right, I'm going to give you guys. I'm going to throw you two
very quickly.
Yep, go, Maddie.
What was your last symbol that we disagreed on?
VRNS.
VRNS. Very quickly, I just want to. We're both talking snapbacks on those two, right?
Right.
Okay, so you got VRNS. Okay. No. The one before.
Oh, the other one.
The one I was hesitant on.
Yep, STEM.
Yeah. Okay. One of the things that I didn't like about this snapback is when you're looking at the 30-minute chart, it doesn't have consistency to it.
Right. Yeah. It was kind of
got blown up and then found
smacked.
support. Right. And yeah, you're reclaiming that with confirmation here. And that's why, I can see it. Right. I didn't just say no, aggressively no, but that just got blown up and then just tried to find stability. Right. When you're looking at this Ashford one and Ashford's symbol,
AHT.
I need to memorize all Mark's symbols.
When you're
looking at this, get smacked down, recovers. Look at the trend line though on the intraday. Remember those snapbacks have decreasing resistance levels and horizontal support levels. Okay. And so unlike that first stem chart where it got blown up and then kind of found stability and then broke out, which can be tradable. And that's why I was like, yeah, let's compare that against others, right?
Right.
It's not a no because it does have the analysis. It's just a matter of, well, let me look at that intraday chart and see how it compares from a consistency perspective against the snapbacks we're seeing in the rest of this area of the market. Remember, it is the Russell 2000 that is doing the bull pullback here, or excuse me, the bull flag pattern, right? So down comes into the trend line. Down comes into the trend line. Looking at that, there's your trend line. Now you're increasing support. One of the reasons why I like the Russell 2000 so much, the increasing support here is threatening the violation of that trend line there. Very consistent if you actually look at the intraday analysis. When you're coming to, once again, stem, gets blown up, find stability. there's not really that trend line to a certain extent, because you only have the 1 point of action here. Now,
Right.
Ashford, AHT, same thing as the Russell. Come into the trend line. Come into the trend line. Finding an intraday support level that is higher than the previous intraday support level. Now, Frank's point of one more candle is very important here, because that one more candle really firms this up here with the potential breakout back up above. We'll call it 6-6.
Mm-hmm.
And so at that point, you're getting above the trend line here. You obviously have a fairly decent level.
Maddie, we're losing your mic.
Uh-oh.
We can hardly hear you. Yeah, no, sorry, we're losing your mic right there. But I think we caught most of the analysis in terms of that intraday price action analysis. Can give me a quick word there, Matt. I think we're losing that for a second. So Frankie, I think we caught Matt's point there between AHT and STEM, correct?
Yeah, they're a little bit different on the patterns. And I think if I were picking one or the other, I would pick AHT. If nothing else, I think it's going to offer us better risk to reward. I mean, I think that's what appeals to me on this, is the risk to reward is going to look pretty juicy if I get the right signal. So I think that's where I will be. I don't know if we'll get Matt back, so I'll throw this one to you and Mark. And I know we're up against the clock, so I'm going to give you two. You got to choose one.
I can't talk AHT. I mean, listen, those July $5 puts are very juicy. That's all I'm going to say.
They're still looking pretty. Yeah, and that's a legitimate way to play it too. I don't have any problem with that, other than I'm braver than that, I guess. But and all that entails, right? Some bragging rights and some misses that Mark never even had to sweat. So it goes. There's pros and cons.
I was going to be done, but I just want to make 1 point on Mark's $5 put options. The reason they're juicy is 228% implied volatility.
Sure.
Have fun with that.
Dude, 80-cent credit on 220% implied volatility.
Again, they're juicy for a reason.
You better want to own it. That's
I find trading the equity is a lot easier than trading the option with that type of volatility.
Yeah, I do too. So that's where I am. But hopefully you get some good price appreciation for anybody involved. It's good to have you back, Maddie. I wanted you in here for this one.
Well, I was going to be done, but then I'm like, no, we can't just leave the juicy comment
Well, you
alone.
can't let Mark have the last word ever, but certainly not on AHT, right? That's just not something that we can do here. So up against the clock, I'm going to throw you two. You choose one. So what I want basically is pick your favorite and veto the other one if you would veto it. If you like it, you just like the other one better, then you don't have to veto it, right? I'm going to throw you. I'm pretty sure I know what's going to happen here.
I'm vetoing one. I guarantee it.
Dude, wait till you see him. You might not. All right. So I know who you're not going to veto, and that's Dick's Sporting Goods, DKS.
Nope.
I mean, that's about as exciting as a development. Well, I guess it depends.
You like the Kinder Morgan breakout?
I like it's very much like the Kinder Morgan.
You like the Kinder Morgan breakout?
It's very, very close. Yeah. The only difference here, I guess, is you might have played the pullback. I think we talked about him last week and had that little flag going. And so, it's one of those things. If you played it, maybe I wish it wasn't doing this, but this is what it's doing. And if you didn't play it, I think you have a very clean breakout. I don't think that anything crazy has to go there.
If you played it, you're fine.
Your
entire analysis has been fine. You're right in the 9, threatening a breakout.
Oh yeah, you wouldn't have complained if it went a little bit further. Now this one's going to look a little different, same general kind of a theme in the market, and that's Skechers. We talked about Skechers a couple months ago when they had that big blowout earnings move, right? And as we usually do when we're talking earnings, we're like
Skechers,
SKX,
SK. Yep.
As we always do on earnings, you just got to wait for the next thing to develop, right? It's very tough to buy after that monstrous gap to the upside. Taken quite a while, right? Since that we pulled back, we tested some old resistance, 50-day moving average, started to show some upward movement. Now we've double bottomed at the 50. We broke out of the downward trend that would be the daily version of what you were looking at on Ashford there early this week. We're now breaking above that. So this would be, and if you flip it to a weekly, this just looks like a pretty respectable bullish retracement confirmation candle, I would argue, at least. So I'm pretty sure everyone's going to pass Dick's, except maybe Tim, because he's a little crazy like that.
No, as on the opposite side, Dick's Sporting Goods is one of my favorite, setups this entire week.
It's a great setup. It's hard to get better.
The Queen's Court on Tuesday, it was my pick for Queen's Court. That's how much I liked it. So yeah, still love it. Yeah, that's right. So what is the essential question here?
So
Frank?
you're
Which one do you
picking
like
one,
more?
and are you vetoing the one that you're not picking?
I'm not vetoing either of these.
So you won't veto either of them. Two different things, right? The thing I like about Skechers, I mean, Dick's Sporting Goods, I don't think I need to say anything about that high base breakout just south of $100 on great earnings and all of that fun stuff. What I like about Skechers is just a little bit of a bullish retracement on the longer term after another great response to earnings. Not really a lot of resistance until the old, that top, and then the trend would suggest that we're going to continue from there. So this one might be one that takes some time to develop as we work into that secondary target area. But I do like the price action that we've seen this week, holding support last week, building on it, actually breaking the trend line, consolidating this week, little bit of upward movement. I think there's a trading setup in Skechers as well. What about you, Mark?
I think both of those are both very, very beautiful charts, both of them. So
that's you would have to pick.
Which one would you pick?
The Skechers one I like the most because that thing is like it's just so pretty and it just screams for me. Like I just like it a lot.
Yeah.
So
yeah.
But I love the other one too. I mean, both of those are very beautiful charts.
You may not get a veto in this. There is some old data here on Skechers that you got to kind of fight through. I mean, I can't hear you, bro. Not right now. But there's some old.
You veto for me.
I will veto.
Tim was just hoping someone would give him that opportunity.
Matt vetoes Skechers. I don't think you're going to get a veto on Dick's, though. I love that Dick's Sporting Goods chart setup. And remember, the backdrop of that was propelled on a huge earnings beat. They killed it on the fundamentals side of it. Huge theme behind Dick's Sporting Goods. So I do like that breakout more from the two. It's one I'm really
I just love Skechers because you gapped up, you came back. New support, old resistance, it held textbook, you violate. I mean, it just has so many components that I like in one chart, but that is a beautiful chart as well.
One last one, then we're going to wrap the show just from a request here in the chat. And a couple of nice comments actually in the chat here recently. Heidi Soto. Hey, I'm a new subscriber and newbie trader. Found this tidy little channel this week and have learned a lot from watching your videos. Looking forward to learning more. Welcome, Heidi. Great to have you. And then I saw interesting one earlier. Trong Trandine asked, hey, Team Tackle, I see an inverse head and shoulder pattern on Snapchat. And Frank, I want you to get your read on SNAP here. Would you guys help me analyze the chart? Trong asked, and there's something here, Frank. What are you seeing in that chart?
Yeah, there is something in here. And I would say it's more of a textbook breakout. I think we had a failed opportunity on the breakout. If we go back into, I guess that would have been February, but I really think this is a lot like NVIDIA, where we really are just in a trading range. And there were a few times where we stuck our nose, above or beyond that trading range. But I think overall, I would say that this is pretty much sideways. I think we get a better picture if we look at it on the weekly chart to kind of smooth out that the day-to-day chop that can get us. I think this is an interesting breakout candidate. I think you could even, it might be stretching a little bit, but argue that we came out of that downward trend and we actually maybe set up the initial buys last week. The only thing I have against it is I am a wimp, as everybody kind of knows. I always like to make sure that it broke resistance. And I look at these guys and I say, I think they probably make it back up to that 70 resistance. That would be where I would fall on them. If someone said, Frank, I traded these guys with the $70 target, I'd say makes sense, especially if we can hold that weekly floor from last week, which is also the little trend line. I would think that would make some sense, but I would expect that 70 to play a role, and I'd want to see that broken out all the way before I called it a breakout. So that would be my biggest concern on these guys. I think they get to 70. I think it might be something that you could map out if you're happy with the risk to reward. But I do think, and it's actually a little north of 70, I'm just ballparking it there. I would want to make sure we broke out of that resistance before I called it a breakout. I would say that this is tradable though, because I do think we've seen enough characters characteristics, with the double bottom, with the catching of the moving averages, with breaking the trend line, with confirming that old trend line as support last week, a little more upward movement here today. That would be where my head is, though. That 70 kind of stares at me with that, that failure back in February. And I'd want to make sure any trade I was doing was showing what I consider the proper amount of respect to that resistance level.
Yeah. Good find there, Trong. Interesting chart pattern. I appreciate the breakdown there, Frank. I think there's some interest here for sure. We'll talk a little bit more about that as coaches.
Yeah, I looked at these guys earlier today, and I was kind of right there because I was kind of looking at the little breakout that they're putting in off of that last high,
Sure.
and I'm kind of was looking at that 70, and so I thought these guys threw a little bit, at least from how I'm seeing them. And so that's where I am. So I appreciate you bringing these guys up. Always fun to look at somebody else's charts too. I look at a lot of charts. I'm not afraid to look at somebody else's.
Absolutely. By the way, Coach Frank runs the Twitter over at Tackle Trading, at Tackle Trading on Twitter. Go and grab a follow there. Subscribe to our Twitter account. Marky, you got a programming note here in about 1 hour and 6 minutes.
The last hour of the trading week, every week, whether it happens on a Thursday or a Friday, maybe one day we'll have Wednesday on Thanksgiving, whenever the last hour of the trading week is, we do at the market bell, where we do commodity report live, where we go over commodities for 15 to 30 minutes, depending on how much there is to say. And then we open it up for conversation, free flowing style, just analyzing the market. Talk about trade adjustments, last second things. Last hour of the trading week is market's usually done pretty good. We like to joke on the Friday show that there's a Friday ramp up. Don't know if there will be today, but it's happened a lot. But anyways, we do that in the last hour of the trading week, happening in 1 hour and 5 minutes. You can access it from the events calendar at tackletrading.com.
I know pros love that, webinar, Mark, so they'll be looking forward to it. And if you're not yet a pro, I did drop a link to the 15-day trial to Tackle Trading's pro membership right in the YouTube chat. It's also in the description of all of our YouTube videos down below, every one of them. You can grab that link, come and join us on the back end, get all the value from the courses and the reports and the premium blogs and more, including these type of webinars that Mark's going to be holding here in just a bit. Guys, that's our week here at Tackle Trading. From a halftime report perspective, we're now going to be going and bird dogging for you, find some great charts for this weekend's report. Have a wonderful rest of your weekend. Be safe. Enjoy it.